This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's crude oil imports in October rebounded to the highest level since May, up 14% from a low base a year earlier in their first annual growth in 5 months. Data showed on Monday, as 2 greenfield refineries prepared to start operations. The world's largest crude importer brought in 43.14 million tons of crude oil last month, equivalent to 10.16 million barrels per day, BPD, according to data from the General Administration of Customs. The October imports were up from September's 9.8 million barrels of oil per day.
Oil prices were stable on Monday, hovering close to $100 a barrel as support from a weaker dollar and recovering Chinese crude imports met renewed demand concerns linked to China's stringent COVID containment approach. Brent crude futures rose by 6 cents, or 0.06% to $98.63 a barrel at 10:26 GMT. U.S. West Texas Intermediate crude was at $92.60 a barrel, down 1 cent, or 0.01%. Both contracts dropped by over $1 per BBL earlier in the session as Chinese health officials on the weekend reiterated their commitment to a stringent COVID containment approach, dashing hopes of a rebound in oil demand from the world's top crude importer.
Moving on to the top news in the energy sector.
Canada's proposal to tax corporate stock buybacks is unlikely to deter oil and gas companies from returning cash to shareholders and may instead put them at a competitive disadvantage, industry officials and analysts said. Canadian energy companies have been the most active in buying back shares of any sector during the past year, according to CIBC, and also funneled profits from high prices into dividends and debt payments, limiting new production investments. On Thursday, the Liberal government proposed a 2% tax on buybacks to encourage companies to reinvest in their workers and business.
The Czech Industry Ministry has proposed a cap on power producers' revenue ranging from 70 to 230 euros per megawatt hour, depending on the source, according to a legislative document published by the government. The lowest cap will be on revenue from nuclear power. The government aims to raise 15 billion crowns, $613.25 million, for the budget next year through the scheme, according to previous government estimates. The proposal sent shares in the largest power utility CEZ down 2%. Next, we have the top news in metal markets. China's imports of copper fell in October on the year for the first time since May, hit by softening demand as stringent COVID-19 curbs curtailed factory activity, while domestic production increased. Imports of unwrought copper and copper products by the world's largest consumer of the metal were 404,414 tons in October, data from the General Administration of Customs showed. The figure, which included anode, refined, alloy and semi-finished copper products, represented a decline of 1.5% from imports of 410,541 tons in October last year.
Gold prices eased on Monday as some investors locked in profits after a sharp rise in the previous session, while markets awaited this week's U.S. inflation data to get cues on the Federal Reserve's rate hike path. Spot gold fell 0.2% to $1,676.69 per ounce by 11:30 GMT, while U.S. gold futures rose 0.2% to $1,679.50. Today's move so far looks to be corrective from the strong rally on Friday, said Capital.com analyst Daniela Hathorn, adding that a softer CPI reading will likely reignite the risk on trade and will, by extension, help gold push higher.
We will now look at the top news in the agricultural sector.
China's imports of soybeans fell 19% in October from a year earlier to 4.14 million tons, customs data showed on Monday, hitting their lowest for any month since 2014, after buyers cut purchases amid high global prices and poor crush margins. Imports by the world's top buyer of the oilseed was 73.18 million tons for the first 10 months of the year, down 7.4% from last year, data from the General Administration of Customs showed. The very low shipments, matching the October 2014 figure of 4.1 million tons, underline an urgent need to rebuild stockpiles. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.